Hello everybody, it's Nick McDonald here. Welcome to this week's ICE commentary on the dollar index and currency markets. It's been 2 weeks since our last video, since we had a short break there for Easter, and if we look at what's happened since then, to be honest, it is not very much. So what has really happened, if anything, is we've just confirmed that we are in a range-bound market. We're actually quite hard-pressed right now to go and find a currency that is trending, particularly a US dollar currency. So if we've just zoomed out here now and look at this, this is back to that point where, when we don't have a really strong trend to trade with, and no obvious trend, even though we can start to nitpick here and see slight uptrends and even slight downtrends across different time frames, the fact of the matter is that right now there's no clear trend. We're now very clearly in a range, and the last few weeks price actions really confirmed that. So what we do though in this kind of range, or what I do, as I look to trade support and resistance levels in the direction of short-term trends. And at the moment, the major level obviously continues to be 80. And it's kind of the midpoint of our range. Even though I could go and draw these range lines more perfectly, I've left it at the big numbers that have been on my charts for months, have given me trading opportunities for months. And you can see the lower end of the range is 79, and the upper end of the range is 81. So we've got good resistance at 81, good support at 79, and at the moment price hovering around and often falling off and from below and bouncing off from above this 80 level. So all of these give us trading opportunities. And at the moment, for example, we're on our way up towards 81, having just bounced off 79. This might, for example, start to give some opportunity around 80. So I'll be looking for those kind of opportunities on lower time frames. That usually means I'll come down and I'll actually drill down to 240 and 480 charts. And I'll start to look for reasons to be buying or selling around this 80 level. If we just come back though and have a look, so like I said, there is no clear direction on any US dollar currencies right now. So if we just come and have a look, for example, at dollar Swiss as a good example of what these markets look like, you'll see here it's very, very similar to the dollar index. And what we actually have is just another chart, which only in this recent period of time. So we don't have to go back too far where we had nice upward direction, nice downward direction. What this has now changed to is a choppy market. So we're not really seeing direction here. I can't look to things like dollar Swiss and look to them for any kind of influence as to what the direction might be going forward. However, we can look at a couple of markets for that kind of influence. One is dollar yen. So if we come and look at dollar yen and see what's happening here, obviously this was one of the strongest markets to the upside, had a really strong run up, and now it's just having quite a big pullback. If we come and have a look at this on a weekly chart, you'll see that we had this big run up, and we're now pulling back. We've pulled back into these moving average buy zone. Down here, not too far away, we've got the 80 level, which is a significant support level, and also obviously a big number, and it's also a 50% Fibonacci retracement level. So when you move down, I mean, this might be about to bottom out now, but if it did get as far down as 80, I think that's around about as far as this is likely to go in the short term. So whether US dollar strength comes in now, or whether it continues to decline a little bit and dollar strength comes in around 80, the dollar yen is showing some signs of dollar strength coming in sometime soon. So bear that in mind, and also let's come and have a look at euro dollar, because euro dollar at the moment is also one of these range bound currency pairs. But when we come and look at this on a weekly chart, what you'll see here is that euro dollar is in a downward trend over these bigger lower highs and lower lows. It's got into a short-term period of consolidation. But if we break down through this 1.3 level here, we'll have confirmed the shorter term lower high and lower low as well, breaking down through a flat level and really looking like breaking as low, or maybe not quite 1.25 because we've got some support just above that, but looking like breaking significantly lower. It needs to break 1.3 first though. This is only bearish if it breaks that. As long as we're above it, 1.3 is a support level. We're about 60 points above that right now. If we break down through 1.3, we're looking like coming down and finding the next level of support. Let's call it around about 1.26, just down around these lows. So euro dollar is starting to show some signs of euro weakness and dollar strength, and dollar yen was also showing some potential signs of dollar strength. Let's come back and have a look at how this could translate on the dollar index. It does not change my plan for the shorter term. I'll still trade off support and resistance levels. But what it does do, and if I come and look at this on a weekly chart, I also see, even though only coming back here, I was quite bearish and looking for things to go lower, what has happened, and we need to just look at technicals. It's very important never to get what I would call married to a position or married to a view, where you're really bearish on the dollar or bullish on the dollar and you just stick with that no matter what. A part of being a good technical analyst is to be able to look at the charts and decide, or a good trader, not just a good analyst, but to be able to look at the charts and decide what is the chart actually telling me? Not what do I think will happen, what do I think should happen, but what is actually happening. And I thought that the market should come down and make lower lows back here as we start to move down. Actually, that's not what's happened. What has happened is we've put in a higher low. Now we've got these bullish candles, and if we break up through the highs of these candles, we'll confirm that higher low. And if we break up through the high of this weekly candle where my red arrow here was, we'll have confirmed not only a higher low, but also a higher high, and we'll be back into a weekly chart uptrend. So this is quite significant. Obviously, if we break down through here, then that would be invalidated. But at the moment, where's the probability line? It's backlined slightly towards the upside. I say slightly because it's only slight based on some influence from dollar yen and euro dollar, but also because at the moment we are still range bound, and it's going to take a little bit of effort to get up there and break up through these support and resistance levels that we have on the way. For example, 81, which is right around about that high. So watching it closely, ever so slightly swaying back towards the bullish side, but obviously that can be invalidated quite quickly. That's just a kind of slightly longer term view to show you what I'm looking at there. But in the short term, nothing changes in terms of I'm looking to trade off, bounces off 79 and 81, and in the middle of that range there's 80 key level coming down to lower time frames and looking to trade with the direction of the shorter term trend. For example, a 60-minute trend, a 2-hour chart, a 4-hour chart, or even an 8-hour chart trend, looking to trade around about that 80 level in the direction of those lower time frame trends as price pulls back into support or resistance levels, or gives me any reason for trading opportunity around those levels. Hope that helps everybody, hope that it makes sense, and I look forward to speaking to you on next week's update.